going to compare HOW and HOY again while the market's down. I'm going to try and slow this video down. If you don't know, if I talk too fast, you can go to settings and you can slow the video down. You can slow down the speed. If you like how fast I talk and you don't like how slow I talk in this video, you can speed up the video. And I'm going to try and break down the data. I'm going to try and make it easier. You see that HOOD? That means this HOY stock is based off of that HOOD. There are other factors, but that's the primary factor. HOOD is the Robinhood stock. And today I'm going over HOY. It is YieldMax. It is an ETF based off of HOOD. HOY will pay you every 4 weeks. They will announce on Wednesday morning the dividend. It will go ex-dividend on Thursday, 7 a.m. Eastern time, if I did not say Eastern time. And then it will pay you Friday. In comparison, HOW is Roundhill. It will pay you every single week. It will announce every Friday morning. And it will pay you on Monday. Hopefully that makes sense. They are ETFs. None of these have been around longer than 6 months. So as far as I'm concerned, they're brand new and a gamble. Just want to bring that to your attention. Also, if I did not say, this is for entertainment purposes only. I am not a financial advisor. Now let's help you read the data. You can see right now, this stock is at 68.20. How do I know that? You see overnight, you see the time, that's telling you last reported time. HOY right here goes ex-dividend on Thursday. They will announce in the morning, in less than 7 hours, they're going to tell you what they're going to pay you to determine if you want to buy to qualify for ex-dividend. The last dividend payment for this stock, you see that bold 689 on July 24th? That means on ex-dividend, it was $6.89. So you would have had to buy it on July 23rd to qualify for that $6.89. Now, if you paid, see that $77.55, $78.77, those were the highs. If you paid $78.77, even with that $6.89 dividend payment, you would not be happy, because you have to understand, this is a month. It did not go back up to $77. The highest it went was about 72 something. 72.80. So you wouldn't be too happy. I mean, you'd still be sitting pretty compared to some ETFs. But if I go back in time and I show you on May 8th, you'd be really happy had you only paid $52.05 for this stock. Also remember, ETFs usually perform best their first year. Not always, but that's just been in my experience. I've handled about 100 different ETFs, and I usually do best in the first year. I don't know what happens. It just kind of dwindles off the next year. Just something about it. Not all of them. There's some really good performing ones, but a lot of them only perform great in their first year. Now let's go over to HOW. First thing about HOW I want to point out. It is an inverse 3-time stock. So you go to the Roundhill website, you will see that. What does that mean? In dumbed down terms, that's telling you when the market's up, it's going to be up higher. When the market's down, it's going to be hit and down lower. Here you can see it just paid ex-dividend. If I didn't already mention, the stock price will drop by the ex-dividend. So if it was announced August 15th to pay $2.45, that means on ex-dividend it dropped. And as you can see here, had you paid, I'm going to show you guys, $77.54 for the stock, and you see it's only at $64.89, even though it's paying you weekly. The dividends are not high enough to recover your money if the stock continues to fall. That's why I call it a gamble. Also, something to note, there are people that use margin. When they use too much of that margin to invest heavily in these stocks, when the market falls, a lot of them go into margin calls and they have to sell at a loss, or Robinhood will sell for them. Whatever brokerage they use will sell for them. And I'm going to scroll down so you guys can see. This one also only came out $50, like $50.66. You've only paid $50.66. You're very happy with this stock. And rightly so. If you paid $77, you might not be as happy. That's why it's important when you buy. And as you can see, when that dividend hit, combine that with the fact that the market dropped, and then you add in that PAL factor of this stock being inverse 3 times, this stock's going to be lower. And then that's why I want you guys to read the data, because at first glance, YieldMax looks like it's doing a lot better. The HOOY YieldMax, because HOOY was sitting at about 68.90 if I remember correctly. This one's only sitting at 64.89. Then you got to look at the data. The data showing this one just paid ex-dividend, so it's going to drop. People are gearing up, trying to qualify for the ex-dividend on HOOY, because HOOY is about to be paid. So it makes sense why one would be down even further. There are a lot of factors. It's not common sense. I don't expect people to know it. And hopefully this helped you guys. There's different strategies for people who like to sit it and forget about it. When you're investing, do you want to wait and see if the stock drops lower on Wednesday to get a better price? Or are you worried the stock's going to go up and you need to buy it as soon as you can? Then there's another factor. Would you rather wait until after the dividend's paid, because you know it's going to drop by the dividend, and if the market drops, you're going to get an even cheaper price? Would you rather just wait a month? That's up to you, or in this case, a week. That's up to you guys. Remember, I'm not a financial advisor. I'm just your friendly YouTube entertainer that's trying to break down some data and help you guys out. And I hope this helps you guys. Remember, HOOW will announce on Friday. HOOY is going to announce in the morning, in less than 6 hours from me posting this video. I hope this helped you guys. But yeah, that's the gist. I'm trying to think if I forgot anything. But I think that pretty much covers it. Just remember that bold amount is telling you what you got paid. HOOW is going to pay you weekly. It's going to pay you. It's going to announce it every single Friday morning. It's going to pay you Monday. YieldMax is going to announce what their ETFs are going off on Wednesday, and they'll pay you Friday. And no, you won't make the money in time. I was hoping when I looked at that fact, but then I said no, because you're going to get paid Friday night from YieldMax, and they don't announce till Friday morning. So it doesn't time as well as I would like it to. It'd be really cool if they were in sync, so you could, get money from one to put in the other, but that's just not how it works on those payments. These are 2 different companies. Not everybody knows that. A lot of people get confused because I say HOOW, I say HOOY. They're both companies that are based off of HOOD. Roundhill keeps putting out these graphs saying, look, we're better than YieldMax because of this. And I think it's funny. I love the competition. I do. I think it's all good and fun, because at the end of the day, it's up to you to decide what you want to invest in by looking at the numbers for yourself. Because sometimes one is better than the other just because of the price it's at, or just because the dividend it's paying. I don't want y'all to invest a lot of money in either one of these just to be safe, because I know it looks good. But I've also seen stocks like this look good, ETFs that like this look good, and I've seen them drop and people lose a lot of money. So just be careful with these. It's okay to experiment, but I just don't want y'all to gamble and then come back crying saying I told you to invest in something that I just said, hey, I'm just showing you some data. You guys have a great day. Happy investing. And I hope this helped break down the data for you guys, so it's easier for you guys to understand what I'm looking at, what I'm talking about. Have a great day and happy investing.